All right, guys, let's just get straight to it here. I know the market is just in complete chaos. There's recession indicators going off everywhere. SoFi just had their earnings, and of course, Wall Street is just beating it into oblivion because, well, I mean, that's Wall Street. That's exactly what they do to SoFi, regardless of what the performance is. So what's going to happen with SoFi? What does all this mean for the stock price? Are we in for a lot more pain? More importantly, all those questions are going to get answered today, guys. Just make sure you like the video if you like getting the truth without the hype, because that is exactly what you're going to get today. Okay, so I know this weekend everything's just kind of blown up around recession and all this other stuff like that, stock market crashing, blah, blah, blah. I'll cover it later on this week here for you guys. But I wanted to make sure we talked about SoFi's earnings first here. And the best way to kind of discuss SoFi's earnings, I'm just going to give you guys the video that I gave to my group in regards to those earnings after those earnings happen. Now, sometimes we listen to earnings in real time in my group there, like we did with Tesla. We're doing it with Palantir tomorrow, actually, where yes, the flash sale is going on, where you can jump on it and listen to Palantir's earnings. Where basically I'm going to go through the entire earnings call together with you guys. You guys ask questions. Obviously, I'll talk about the call itself, what they're saying, what it means, what Wall Street is looking for, a whole bunch of other stuff like that. Plus, you get everything else that's involved with the group. Check out the pinned comment down there. See everything that's involved, you know, free courses, free coaching, all kinds of things involved with that. But sometimes the earnings calls kind of stack up back to back to back to back, kind of like it did last week. So I end up just kind of, as I listen to the calls, make my notes, give a review kind of the earnings after the fact there, and I release it right there to my group as quick as I can get it out there. And I actually ended up losing my voice last week because they were coming so fast and furious there. So I had to switch to just making long form posts in the Discord there because my voice just went and it's still kind of jacked up. Anyways, I'm going to play that for you guys here now, but remember, if you want that direct access to me, you want my thoughts on these recession indicators and everything else, we've already discussed that inside the group. The guys know exactly what my game plan is. The flash sale is going to end tomorrow, guys, for the group. So I wanted to make sure you guys had this information, understood exactly a little taste of what you get there in the group. There's a lot more to it than that, but enough of that. Let's go ahead and play the video for you guys right now. All right, guys, so I just got done listening to the SoFi earnings call there. I got some notes here on the computer. I'll throw up a couple of slides too, at least the slides that I felt were not necessarily the most important, but for me, they caught my eye the most. And especially if you're a newer investor to SoFi, to kind of understand kind of what the bull thesis is for SoFi and kind of what they do in regards to the stock itself. Of course, we'll talk about stock price and just kind of what for me was the biggest takeaways from this earnings in general. But once again, we saw the same pattern with SoFi. Double beat or triple beat and raise guidance. We got that once again. And this time we got a lot more clarity on a lot of things coming. And more importantly, you have proof in the pudding in regards to the earnings of the strategy that they're basically using right now, which is kind of we're going to hold back some things right now and then be able to kind of explode the business later on once we get in a better interest rate environment and be able to control the risk. More importantly, the timeline in between, that is starting to see results. Oh, and despite the fact they're kind of slow playing things, they're still seeing incredible growth. So let's kind of jump into some of the highlights here. And again, I'm just reading right off my notes there. Net revenue up 22% year over year. That's despite holding back the lending, guys. So you can imagine, think about it kind of like a company that could increase the revenue, could increase the products that go out, but they choose to limit their products for whatever reason, maybe so they can charge a higher price later on, whatever the case is. It's kind of the same exact thing. They could pull that lever and create more profits like most banks do. Most banks are maximizing up to their allowable limit in regards to loans. That's what most banks are doing right now. They're intentionally holding back on that, basically keeping it all back, going, hey, yeah, we could increase loans by X%, but we're not right now because we're waiting on some other things to kind of explode lending on the other side and to kind of be conservative. And to me, that absolutely plays into the trying to get a fintech multiple versus a banking multiple later on. We'll talk about that here a little bit later on in the video. So that right there was the first thing. Financial services and tech platform grew 46% year over year. We'll discuss that number again. That's the number we want to go up. We'll discuss that here in just a second. Member growth up 41%. 40% of the growth in regards to products and services were from existing members, meaning that their members that use SoFi are using more and more of the products, buying into more and more of their products as they're rolling them out, which of course is very, very strong overall. It's not new people coming in. Well, obviously they're having new people come in, but they're also seeing existing customers starting to drive other revenue streams within the company. Basically, the new things they're introducing, the new people are buying into a lot of those. And they talked about 2 new credit cards that are coming. Now, of course, you can get in all the details of what type cards they are and whether or not that drive revenue or not. I'm not going to fly down the SoFi bull train of, oh my gosh, this adds so much to the EPS in the next quarter and all. No, I think they're going to slow play these credit cards. I think they're going to slowly roll them out selectively to members that kind of fit the criteria for those 2 credit cards. And I think that's going to be much more of a slow play later on. The beauty of credit cards is they are high margin and they provide a ton of EPS to that bottom line. Trust me, go look at, JP Morgan, whoever's credit card servicing and how much money they make in terms of interest fees and everything else off those credit cards. And it is astounding how high the margins are and how high profit that is, despite the fact, yep, you're going to have loan losses, you're going to have charge-offs, all other things like that. But SoFi right now is not tapping into that. And they have 2 new products coming out to tap into that even more. So that right there is another bullish point for the future. But we're seeing growth right now today. That to me is the biggest difference between last quarter, maybe the quarter before, and this quarter is we're seeing growth starting to accelerate. But at the same exact point, I don't think we're to the stage yet to where the rocket ship is kind of strapped to the back per se in regards to growth, where I think the bigger growth is coming in the future. I don't think it's today, not in terms of numbers. I mean, even in terms of percentages, I think we're going to see bigger growth numbers in the future because of that holdback in lending that's going on right now currently. They talked a little bit about the economy and the consumer. Both of them are very steady, very solid. They didn't really have any negative commentary whatsoever in regards to that. They just said the same exact thing about their charge-offs. That was one of the bear cases against it. They basically said, hey, we're past that peak now, and it would take something catastrophic for us to ever see that peak again, much less go above that peak. So catastrophic meaning, a severe recession, a depression type event of some sort, a black swan event of some sort. Something major happening is the only way they see that getting worse, which that's true for every bank that's out there if one of those events happens. So that right there is good to see that they don't have something extra risky on the books. They've managed to manage themselves through that risk out to the other side there. And now they're kind of on the downhill slope of that risk, not going away completely because it never goes away completely, but being probably lower than what the industry average is. Now we'll talk about stock price here and kind of the biggest thing that I see in regards to the stock price, both short-term and long-term here in just a second, guys. But let me throw up this chart right here first. I'll throw up a couple actually here for you, and let's discuss each one of these. So for the rest of 2024, guys, this is their adjusted guidance. Now, again, they adjust it every quarter. So you guys, you got to kind of understand that with SoFi. They're going to change their guidance every quarter. Financial services net revenue growth of more than 80% versus 2023 levels. Again, that right there is a huge step up in financial services, which is where we want to see the growth coming from. Now, lending adjusted net revenue at least 95% of 2023 levels, which is actually higher than what it was before. So when you're looking at that, you're going, okay, even though they don't expect their lending to be as high as 2023, it's not like they're lending half as much or, a third as much or whatever the case is. I've heard that too out there kind of floating around the internet and such, and it's just simply not true. That right there is exactly what they're guiding towards. Tech platform net revenue growth of mid to high teens versus 2023 levels, which were significantly lower than that, which again, I could kind of see somebody wanting that to be higher when you're seeing such huge numbers everywhere else, but it's not a terrible number either. And look at some of the growth rates of some of the other companies that we're paying for and look at the multiples that you're paying for those companies more importantly. And you see there's a lot of folks out there with a high 20, low 30 multiple on their stock without being in the mid to high teens, without having some of the growth rates in some of the other areas. And remember, that's just simply for the tech platform only, which they discussed briefly. They didn't give us a lot of detail. I won't say that was disappointing, but I wish an analyst would have asked about it so we could have gotten a better answer. But they kind of hinted around the tech platform growing next year even more, a lot more than that. But right now, this is just 2024 guidance. All right, for these last numbers here, we'll throw up the next chart, which you look right there on the left, you can kind of see what they did in 2023. That was their actual numbers in 2023. You can kind of see the original guidance for the year, what happened last quarter, basically after Q1, whenever they adjusted guidance, and you can see each one of those has been kind of adjusted up. And once again, here we are, second quarter, more adjusting up in regards to the guidance there. So you see adjusted net revenue there, 2.425 to 2.465. Again, annual growth rate going from at the beginning of the year, they guided to 14 to 16. Now they're guiding 17 to 19 in regards to the annual growth rate. Let's see here. Do we get up over 20% come next quarter in regards for the year? It shows you how things are accelerating there. Same thing, adjusted EBITDA. You started off the year with 580 to 590. Now you're looking at 605 to 615. Again, accelerating at that stage. GAAP net income, your loss there. Basically, you see the loss last year, 301. You're looking at a loss of 301 versus now we are looking at, hey, we were going to make 95 to 105. Now we're looking at 175 and 185 respectively. Massive jump in net income. And again, the same exact story with diluted EPS and actually book value looks like it's the same guidance from last time, but you see the huge jump from the original guidance at the beginning of the year. So for those of you guys that aren't familiar with SoFi, that's pretty much par for the course. That is what they've been doing quarter in and quarter out for over 10 quarters now. It's just basically a double beat or triple beat and raising guidance. So I know whatever numbers they're giving me, if they follow the same exact pattern they followed for 10 plus quarters now, we're going to see better numbers than what we're looking at. And on top of that, we're seeing some acceleration in some key areas. And more importantly, I don't think they pulled all the levers yet to create even more acceleration than kind of what you can model out. Of course, you can try to guess what it's going to be, but I'm not into guesswork here. That's not really not my thing. I'm much more worried about fundamentals, what's going on with the fundamentals, which they are improving every single quarter. Not only are they performing, they're improving quarter in and quarter out. And secondarily, the stock price seems to be staying disconnected from those fundamentals, which is exactly what you want to see as a long-term buy and hold investor, is the fundamentals getting better, but the stock price going down. I know it's probably reversed, so it's the stock price or fundamentals are going up, getting better, justifying a higher price, higher valuation, all those sort of things like that, but the stock price goes down or stays flat. That divergence, all that is extra alpha that you're going to make in the end, because there's not a single stock in the history of the stock market that has never had the fundamentals, the stock price never catch back up to the fundamentals. It has never happened where stock just stayed down forever and the fundamentals never came back to, or the stock price never came back to the fundamentals. Now, of course, it's worked the opposite way too. Where stocks have gotten way ahead, price has gotten way ahead of the fundamentals, and they eventually corrected back down to the fundamentals and where the actual fundamentals were. So it works both ways, but it's never happened in the history of the stock market where stock has not reached those fundamentals. And when a stock is performing like this is different than kind of a PayPal, where that's kind of a turnaround situation. That's different. This is a stock that's been performing the whole time, but yet it's still getting disrespected by Wall Street, which just means I can confidently just continue to add shares, continue to add shares, continue to add shares, and I'm going to make a lot of money over the long run. Matter of fact, the longer this gets and the more frustrated people get with the stock and the more frustrated Wall Streeters get and the more people bail on it and all that good stuff, I'm going to make even more money, because it means that selling pressure will stay in the short term, but I'm in this for the long term. So for me, what I'm seeing when I look at all the numbers is I am seeing big growth in what will get us the fintech multiple. We're not seeing big growth in lending yet. We're seeing big growth in financial services, and obviously if the tech platform can catch up as well, that right there, we're seeing huge growth. And you saw right there in the chart that they're assuming 50-50, 50% lending, 50% over here, the other side. That's going to get us a fintech multiple of some sort, not a traditional banking multiple, because there's not a single bank out there that is doing it that particular way. So that for me is exciting to see that growth accelerating in those areas to where it, I won't say it forces anybody to give it a fintech multiple, but it makes it very clear it needs to be closer to the fintech side versus the banking side. We've kind of talked about that spectrum before. You got pure fintech over here, pure banking over here. And, I think SoFi is going to fall somewhere in the middle in the end. Now, if they continue to grow the financial services, and obviously if the tech platform really starts to move, that's when you'll see it get closer to fintech. It'll never come all the way over here to a traditional fintech multiple, because it does have such a large banking component. But if we can get that needle just to 50-50, or even a little bit further over here to the other side, it virtually guarantees we're going to get a multiple somewhere in the middle to the other side there. Of course, the range, of course, in the end, Wall Street determines that, not us. So Luke's opinion on what it should be is kind of irrelevant to that in the end. But it's not like Wall Street just goes, oh, well, it doesn't matter. It's just going to be down here forever. It's just going to be a bank because we think it's a bank. Same thing with Tesla. It will never trade down at a PE of 3 for, say, like a lot of the other automotive companies are, because, well, they're just an automaker. That's where it goes. I'm not saying it should trade at a PE of 100 either, or a pure tech multiple as well, unless they actually turn the business around to that point. But it's never going to go all the way back down to that level too, like some bears think it should. Now, in terms of the stock price, you got to remember, we got to keep doing the valuation in that first year that you're profitable. You see it right there. You're just getting a few pennies in regards to EPS going in the right direction there. But when you look out at analyst expectations, and I think these are going to adjust up, and they continue to adjust up every single quarter, you're seeing that in the future, you're going to make a lot more money in the stock, and that EPS growth is going to accelerate. So right now, today, if it ran up to 15 or 20, somebody told me that somebody's already talking about, SoFi's worth $20 per share right now, or could be valued at $20 per share, or some other things like that. It's ridiculous. At that stage, I personally would be selling my SoFi stock, even though I don't want to, because I know that's a ridiculous multiple and it's coming down and they can't justify that sort of growth. That is pricing in, 5 years worth of growth today. And I don't need that sort of pricing in regards to growth. But what I am loving and what I am seeing is, if you want to call fair value, $8, $7, $9, somewhere right up in that range right there. I can't make an argument for or against that all the way around. I can't say that's not reasonable, because it really is reasonable at that stage. We get up over $10. Am I going to sell? No, because that's not egregiously overvalued, probably a little bit overvalued in my opinion. But I'm seeing, the important thing that I'm seeing is I'm seeing accelerating growth. And when you see things accelerating and there have other levers to pull, that are going to accelerate that growth even further, that gets you excited right now, to where I hope Wall Street just kind of goes, oh yeah, well, we'll wait until you launch your credit cards and see the numbers on that before we give you any credit for that part kicking in. Or we'll wait for you guys to start cranking up lending again before we decide to pump the stock up again, because we know there's going to be huge profits coming from that, huge revenue growth driven from that. Hey, that's cool. That's to our advantage because they're thinking short term. They want to know what is going to make me the most amount of money today, coming into next quarter. That's maybe by the end of the year. Maybe there's a few guys out there thinking that. Otherwise, they're thinking, what's going to make me the most amount of money the next few weeks, the next few quarters, whatever the case is. And it's not going to be this. But as a long-term buy and hold investor, I'm looking out going, wow, if they continue with the beat and raise strategy, which I see no reason why they would stop, it's going to be an exciting, not only tail end of this year, but they're going to send back guidance for 2025. And then we're going to basically see huge numbers coming in 2025 as these products all start to launch, as the Fed starts to lower rates, and we start to see their lending accelerate on the same exact side of the coin there, along with those interest rates going down. I see no reason why they can't continue to grow their customer base and continue to get more and more acceptance of more and more of their products from their members, considering they've grown it every single year for the past 2-3 years now. So all those sort of things line up for me for a big future. We're not there yet. We're not going to see the numbers yet. But man, some of the things we were talking about at the beginning of the year that we were saying, hey, we really want to see these things start accelerating. We really want to see big growth in that. We're seeing the big growth in real time. And more importantly, they're telling us, yeah, this is really nice, but there's still more to come there. So I'm excited for it long term, although I don't think I'm going to see the big numbers that I want to see that are really going to increase the valuation until 2025, but that's okay. I've been adding since the stock was down in the $4 range, but it's one that I'm happy to add shares on. And remember, it's not a turnaround situation like PayPal, which we'll discuss here in a little bit whenever I finish listening to that earnings call there. So overall, very happy with SoFi, very happy with the earnings. And more importantly, I'm very happy with the messaging moving forward because I can see progress. It's kind of like it's going here. I can see the progress up until this point, and I'm very excited that this curve that they're on, I think is going to adjust up. Now, not crazy up, not this ridiculous bull case to where it's really worth $20 right now or something ridiculous like that. Now, I'm not going that far. You guys know exactly how I am. But I can see a path to where the valuation resets are going to start coming for this stock fast and furious come next year. So, and don't forget the flash sale ends tomorrow where you get videos just like that. You get to see all my buy and sell alerts in real time, get my complete watch list for price targets, have access to me anytime, jump on our live Q&As, take your 5 courses for free, get your free coaching, use the stock analyzer tool for free. Guys, there is so much involved in the group. Make sure you check out the pinned comment, take advantage of the flash sale before the price goes up. And click this video here if you want to see exactly what I'm buying in this market, and click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.